All right, so we come back from the weekend with the last few days of the month, and we had a really good continuation of Friday's rally at the Open today. We didn't get a whole lot of follow through after the Open, but at least we held the gap open. And I think there's a pretty decent opportunity that might continue over the next day or two until we get to September 30th, and we're done with this quarter. We're done with the end of the month. And then we get into October. And October traditionally has been a pretty volatile month, seasonally, especially the early part, and we'll talk about that. But we'll also talk about some other technical reasons why there could be some volatility here going into the end of this week and next week as well, from some other things that are cropping up on the charts. And then we'll take a look at our trade of the day. Very popular strategy we've been using, but it kind of continues with the theme of finding opportunities on individual plays that might not move as much as the regular market as a whole. It might do its own thing, so to speak. So let's go ahead and get started. Today is Monday, September the 28th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicators. We always do. You can see the nice rally, continuation of Friday's move higher with a gap up today, and then didn't really go much of anywhere after we opened. We talked about in a technical analysis class on Friday. Again, remember, all of our subscribers get access to that class. Monthly and our premium subscribers. In fact, it's kind of like a market outlook. At least, there's other elements. I do scans. We'll do custom scans in that as well, and take a look at some indicators too. But a good chunk of that is kind of what we talk about here. So if you missed that Friday market outlook, remember there's always a real deep dive into the technicals on Fridays in my technical analysis class. They're all recorded. You have access to all the archives. And there's in the technical analysis forum for our premium subscribers, there's a list of everything we've talked about. All the topics have been covered. But we talked on Friday the expectation that we would continue to move up towards the moving average. And that's probably where we'd get to at that point. You can see short-term sentiment jumped up. Back up into the reversal zone for both lines, above the market sentiment line for both lines too. You see we haven't had that since the cluster. The intermediate line's turning up again, is almost up above 20. You can see we've been declining ever since the cluster, and that's turned around. We've kind of broken however you draw your downward trending line across these tops here. Drawing lines is imperfect science, but we've broken above that line. But again, dark pink shading and red line because we're still below the moving average, and that's the case on all of these indexes. The only difference on the NASDAQ, you actually have light green shading because we have popped up above 20. You got a really strong near-term line there, so that's a good sign. And then the Russell 2000 also has light green shading, but still short-term sentiment not nearly as strong. And it actually, remember, had the oversold cluster, which was unique among all the other indexes, which is funny because this was kind of a catch down trade. It caught down to the 23% retracement level where it was so far up above it while everything else was trading at or below it. The S&P was just a smidgen below it on Wednesday before and Thursday before coming back up, and now easily back up above. So kind of back in this noisy pattern, but also tells me too that I don't think we're done quite yet. If we end up with a move similar to what we saw in May 2019, which I've talked about ad nauseum, you can see we had the first move up. It got up to the moving average. First move down, to the 23% retracement of that rally. We got back up to the moving average, and then we rolled back down and eventually hit the 38% retracement. So something like that, while I don't think we'll get all the way to the 38, but it's something like a move like that down to the 78% retracement of this decline is definitely within the realm of possibility. If you take a look at the weekly chart here, short-term sentiment, we had a pretty decent, because of Friday, we ended up with a pretty decent long lower shadow there. Short-term sentiment rallied, and it's really continued to rally this week. Which is a very good sign. Again, market sentiment, the intermediate line is actually still well above the moving average, and we're not anywhere close to hitting the 30-week moving average, which you can see when we do pull back, that tends to be about where we pull back down to. as of right now, it is actually at the 38% retracement. You know, if it took a week or two to get down there, it might be at the 78 by the time we got to it. So keep that in mind that, you know, you might get some rally here, short-term sentiment rally, but we might not quite be done with this pullback, so to speak, until we hit that 30-week moving average here on the weekly market forecast. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon right here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us there on YouTube. Also, while you're down there, hit that thumbs up icon. That tells us two things. You liked our video tonight, and you want us to do another one tomorrow. It's a quick way to give us feedback. If you don't like our videos, if you don't think we should do any more, then you don't have to click on anything. But if you do, and you want to let us know, then click that like button. You can do that right now while you're watching. Also, while you're down there, comment. What did you get out of the video today? What stood out to you? What questions or comments do you have? Post those down in the comments section. You can subscribe to our website for free. There's a link popping out right there in the top right corner of your screen. Click on that link. Takes you to our page where you can subscribe. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42. And then join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, I invite you to check out some of these other things over here on the right, including all of our classes, our trading rooms that we have. All of our subscribers, our premium and our monthly plus subscribers get access to all of these trading rooms. They also get access to our Market Outlook live videos. So today at 3:30 Eastern time, I did a live video where I reviewed all the old Market Outlook trade ideas I've done, all the way up to the point where we close them. And we also put on today's trade idea that you're going to watch here in a minute before the market closed today. So if that's something that interests you, check that out. Again, all of that comes with our Plus subscription plan here, as well as all the old archives of any classes that we've done in the past. So, and there's no commitment. You can just do it a month at a time for as long as you want to check us out. Also, come down here at the bottom, click on this heart. It opens up this new window and hit that like button there. Hit this thumbs up icon, takes you to another new tab, to your or to our Facebook post. Hit that like button there. Again, the more you do that, the more more than 135 people will see these posts, because Twitter and Facebook will promote it to everybody who follows us. The more likes and engagements they have, it benefits you because they will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here, just right down below the video. All right, now let's check out the weekly, some of these other charts here. For example, let's check out this one, the weekly chart, and you can see after getting a pretty decently bearish candle last week, we are starting off with a pretty decently neutral to bullish candle this week. We talked about that possibility over here, and we're back above the 50-day moving average. And we'll see how this plays out. We still have very strong momentum, and like I said, we haven't touched even the 200-day moving average yet after the golden cross, which that 200-day moving average now is up above the 78% retracement of that decline. So again, we can come down to that line, flirt with that 200-day moving average like we see a lot after you get golden crosses. You flirt with this before you take off. This is that May of 2019 that I talked to you about before. You can definitely see something like that again happening here over the next so many weeks, especially with the election coming up. Take a look at the three green arrows. We have one. Stochastics usually, when it's in the reversal zone, usually is one of the very first ones that come along. You can see the MACD is very, very close too. And obviously we're not above the moving average yet, and that's when you get the third one. We are, if you notice, back above the 8-day and the 17-day moving averages. So we've been below those two lines for quite a while here. We're back above those lines. So a little bit of positive short-term sentiment. We'll see if we can get above this 30-day and stay above the 30-day moving average there. If you take a look at like the RSI and the CCI, we are back above their midpoints, back above 50, back above 0. Obviously not above 100 or 60 yet, which is where you'd be bullish again. Over here, the negative is still not back below 25. The positive is back above 20, but not above 25 either. So you can see we're not we're not back to being bullish in the least bit. Here, let me bring that chart back up. And then finally looking at the Ichimoku cloud, we're still got a bearish trend going. It's not very strong. It's moderately strong, and you're still below the blue line. You're just barely outside the cloud here. So look for some resistance to occur at that old 100% level, 340, as well as where the blue line would be right now, and of course where that 30-day moving average is too. You also see why we kind of stopped and didn't go very much today, because we hit that point of control in the last 4 weeks. And I talked about, again, in that technical analysis class about this purple area coming down and getting out, this volume node getting outside of it and kind of lowering down, and that's what's happening. All this volume will come off the table here. So that means the next major resistance is right about 339, 338, 340. Well, hey, that's where, lo and behold, that's about where the 30-day moving average is. So that's where resistance is going to be if we do continue to be bullish here in the next day or two. What will be interesting to see is if how things wind up. Now we never did drop below 10 on the intermediate line. We're already back above 19. And on the weekly chart last week, we ended up not having an oversold near-term line because of the long lower shadow. But now we are 2 more days left in the monthly chart, and that's going to be a very fascinating thing, because the momentum line now, because of the long lower shadow here, is back outside above 20. But we know when we're at the lows of the month that we are way down here to the extreme lows, and it could definitely set you up for a decent bullish. Whereas if you get long lower shadows in monthly charts, they tend to be bullish, but you also tend to trade in the range of the long lower shadow first, which means if we end up being bullish over the next couple of days, and we end up kind of holding this long lower shadow, the near-term line stays up here, then expect October to come down and test those lows and fill in that trade within that range, just like we saw here, maybe even November. And again, remember, this is the May of 19. See, May of 19 we closed at the lows. We were able to bounce right back up, and that might be more ideal for some, to be able to get a good bounce going into October, and that would require that we close on the lows, which would mean that we would need to fill in this gap from today, tomorrow, and going into Wednesday, come back down into this 321. Probably wouldn't go too much further below 322 with that volume node there, but that would be a factor of that this resistance holding here and coming back down. I think it's more likely we come up a little bit more, up to 339, 340, maybe even get a little yellow line before we then turn back down, because I do expect us to continue to have some volatility throughout most of October as we head into the election. Take a look at the volume in the trading range. We had just barely below average volume. When you add today's gap here, we were just barely below average on the range. That range is still pretty darn high. You can see, we're up at this 2% mark. I don't expect it to get too much bigger than that. So, again, it's more of a grinding pullback. I don't expect falling off a cliff anytime soon. The VIX would suggest that too. You can see lately the highest the VIX is getting into the bottom of the neutral zone. So we're not really getting the huge spike, which means we're not going to get, it's not going to be that big of a deal. We might eventually, by the time all is said and done, we reach that 38% line, we might, get volatility up to 95, maybe to 100. But we're not looking for a big volatility spike. We're not looking for big downward moves. It's just going to be more down moves than there are up moves, as long as that market sentiment here is falling. So to review that technical outlook before we look at a few more things here, obviously we're having a nice little bounce. I expect it will probably get a little bit more as we head into the end of the month, into September. Then we start with the fourth quarter, which is traditionally pretty bullish. But I think with the election here, I think the beginning of this fourth quarter might not be nearly as bullish. And we have the opportunity. I know, again, I'm not expecting us to free fall. I just expect us to grind our way down towards that 38% retracement, if that, on the S&P. But most likely, like on the NASDAQ, which has got a poorer margin of safety, it's had a much bigger run, much more room to fall to support than a lot of these other indexes. So it's not going to be that big of a deal. But the last 3 days of rallies, I don't think we're done. I don't think that we can call it good, and here we go again. We've Yeah, we've closed above the low, the high day. We did that actually yesterday or Friday, but don't expect a new multi-month intermediate run to come out of this. Now we still got some more volatility left before we're through with this. So what do you think? Do you agree with that? Do you disagree? Comment down below, especially if you disagree, as to why. What are you seeing? What charts or indicators are you seeing that would suggest why you're either a lot more bullish than I am or a lot more bearish than I am? All right, now let's go ahead and talk about what's driving the price action today. And let's take a look at how things performed just today. So we'll come down here to September and we'll look at the 28th here. Look at a 10-minute chart, and you can see small caps and tech stocks both rallied pretty sharply. Now, small caps started the day strong. NASDAQ was underperforming. It was a late day push that got it up to its highs of the day. Whereas small caps hit the highs of the day really early and just kind of stayed flat all day. Same with the S&P 500. And you can see down at the bottom here the big push that we've kind of talked about quite a bit, and that is with the dollar index. That's a big reason why we've been either bullish or bearish right now in risk appetite, is because of the dollar. And you can see the euro's been hitting, got its own oversold cluster well below its market sentiment line. Short-term sentiment has been as well. Nice little rally. So the drop in the dollar, rally in the euro. Again, I don't expect that to last. You can see maybe up to the 23% retracement, maybe up to the 30-day moving average. But I don't think their pullback here is done yet. Now, I do expect in the long term the dollar continue to be weak. But in this little short term, with risk appetite, with just having a little bit of a pullback, I do expect some more strength in the dollar before it turns back down. In the case of yields, yields were up today and bonds were down, but not too significant on the yield front. In fact, if you look at TLT, it's down today, but you notice it's actually got dark green shading in the green line, and it's above its market sentiment line. So we'll see how long this lasts. A little bit of a bullish intermediate confirmation signal would suggest that maybe today's weakness in long-term bonds, maybe all that we get there. Let's take a look at the major global markets that are out there. Let's look at the 12 grid. Obviously with China and China's got some room, really good rally today in China, as well as pretty much all globally. But if you take a look at Germany, France, UK, they're all, technically oversold in the short term. So it's a pretty decent reason why we're getting the bounce here, except for Brazil down there. But a pretty decent reason why we're getting the bounce. And Japan's got a nice, good bullish trend. Everything else is just kind of bouncing off of some short-term lows, and so don't expect too much more out of it than that. As we hit some, these red lines will all act as resistance levels for most of these major countries and economies that are out there. So that's kind of how especially with the dollar weak. That's a big reason why all these international stocks bounce as much as they did. But it was, as you saw in the previous chart, it was pretty much a U.S. market outperformance in both IWM and QQQ. So again, just more of a short-term bounce coming out of the weekend, and heading into the end of the month. Then after the end of the month is done, then I expect that we'll go into October with some more weakness and fill in this monthly low candle, shadow that we see on this September's monthly candle. If we don't drop to the monthly low in the next couple of days, which I don't expect that we will. All right, now let's take a look at the sector performance. And again, let's just look at here today and see how things performed. September 28th, there we go. So you can see energy and financials and industrials. So again, and materials, you can see it's weak dollar performance, but energy, financials, industrials, remember when they lead, they're not the greatest leadership. They're not the most long-lasting leadership. The most long-lasting leadership is technology and communication services and discretionary. And discretionary did okay. You can see your safe havens underperforming. Real estate actually did okay today too, but not your typical leadership today. And that is kind of what's like that's another reason why I think, you know, we might continue for the next little bit, but that's the weakness isn't done. This isn't what this type of move isn't what starts us off on good bullish intermediate runs. We want the tech leadership. That's been the leadership. That will continue to be the leadership. Not every day, but and especially not during the pullbacks. But you know, when we see bounces like this, then again, it just kind of throws into question how much longer like a little bit of a rally like this can last. And like I said, I give it another day or two until the end of the month, and then we'll see. We'll see. And if it's not, if we do retest those lows, then that's going to be a really, really good thing, in my opinion, for bullishness going into October. But I just doubt that that's going to happen. I think it's more likely we pop back up here, and I think, or stay up here. I think that we'll still get some leadership in these areas before we make another leg lower in October, especially in early October, and come down to that closer to that 38% Fibonacci retracement on all these major indexes. So speaking of industrials, that's where my trade idea of the day comes from, and that's Caterpillar. Caterpillar had pulled down to its 23% retracement level, light pink shading, yellow line, and is bouncing back up with some pretty good short-term sentiment. Not surprising. Most everything, especially if it's dollar related like these industrials are. If I take a look at the long-term chart here for Caterpillar, you'll notice that it's still above a rising 50-day moving average. If you take a look at the 3 green arrows, you'll notice again back up above not just the 30-day moving average, but also the 8 and the 17-day. The MACD histogram is rising up. So Stochastic's avoided so far that strong oversold condition. We also didn't get those oversold conditions at all in these oscillators, the RSI, the DMI. You notice the DMI stayed relatively strong. The positive index never did drop below 20. It's bounced back up above 25. The negative index back below 20. We did lose the trend strength, so we have some noise now. But you can see we're trying to pop back up. We're back above the blue line. We're easily above the cloud. So very strong bullish pattern, and what's even better, not in terms of the directional opportunity to the upside, but at least holding this level of support here is, we're back above the point of control, very big, and potentially, at least on an intraday basis, flirting with breaking out of the value area. So pretty decent support down below where we're at. That sets us up for doing a bull put spread. So what we're going to do is sell the 145, buy the 140. That ends up giving us, I think it was about $1.33 per contract. On a $5 wide spread, $1.16 is a 30% return on risk. So that's good return for the risk we're taking. We're taking a full position size, so we don't have to worry about earnings. And we're also doing October because I can still get the risk. I can still get the return for October, even though we're inside of 20 days. So again, just trying to take advantage of, again, some strength. And if it does pull back, I've got some room for it to pull back. Here's where the break even is. I've thrown on there. There's the blue line. So, if we do continue to pop up, maybe up to 152, maybe up to 154 in the next couple of days, then I've got from 154 all the way down here to 144 where there's some lows that I can trade and in any kind of weakness or any kind of up and down weakness and still be okay and still be able to get a gain out of that trade. All right, and that wraps us up for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That pulls up our Market Outlook forums on our website. All of our subscribers, even our free subscribers, get access to that forum. So you can be able to interact with other Market Outlook viewers, post any questions, reply to anybody else's threads, and let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, as well as on Twitter and Facebook too, and comment on our video down below. Have a great rest of your Monday night, everybody, and we'll see you all next time.